Hi, good afternoon. My name is Jamar Jem Padin. I am a chartered professional accountant here in Canada, and I have my own accounting firm. I am helping small business owners pay less taxes with higher income through tax strategy or planning. Um, so this morning I am off from my usual day-to-day office work because I have to bring my dad and my daughter for doctor's appointment for their annual checkup. Hey, Ate Gina. Hey, Charmaine. How are you guys? So, and I just realized I need to share something with you guys as additional tax tips. I know that you're already aware that medical expenses here in Canada, you can claim a tax credit for that. So I will just gonna elaborate certain situations wherein you can maximize the tax credit deductions, whichever is one is beneficial. Should the spouse are going to claim or the wife is going to claim. So in these instances, wherein like we're showing two pictures wherein the wife has a lower income of, let's say, 38,000, and the husband has this income of, let's say, 48,000. So for example, in a year, you have a medical expenses of, let's say, 4,000 something. And just so you know, all the 4,000, you cannot claim that one as an entire medical deductions. They have this cup wherein they have a deductible. Hi Suzette, how are you? Hi Darren, how are you? So they have this cup of 3% of your income as a deductible expenses. It's just kind of like an insurance. It works just kind of like an insurance. So let's say you got a 4,000 medical expenses for yourself, for your husband, and for your kids. If you got 32,000 income, only 3% will be deducted, or whichever is lower. They have a cap of like 2,302. So whichever is lower, that's the amount that you're going to deduct in your actual expenses. So let's say you got an actual expense of 4,000 and yourself has this 32,000 income. So 3% of that's 960, and let's say your husband has this 48,000, so 3% of that is 1,440. So now if you can notice, the client that has this lower income is the one qualified to claim the medical tax deductions, because in that way you have more deduction to be claimed than the spouse or than the partner that has this higher income. So in this case, the tax tip for today is that for you to be able to claim a medical expenses and maximize the amount of tax deductible, compare the amount you can claim with the amount your spouse or common law partner would be able to claim. It may be better for the spouse or common law partner with a lower net income to claim the eligible medical expenses. Hi guys, hi Aris, hi June, hi Jerry. Hey, how are you? Hope to see you in the next maybe 2 weeks again for that networking event. And I'm hoping I can be there. Crossing my fingers I don't have that urgent client call. Anyway, so yeah, we're just discussing about medical expenses, tax credit, on how you can maximize who will be the one to claim, so you can have you can maximize the allowable tax deductions. So in this case, a partner who has this lower income will be beneficial to claim the entire medical expenses. This is for the individual taxpayer. Now, for the small business taxpayers, how we can maximize the medical expenses part. Of course, you cannot claim a medical expenses for yourself, being a small business owner. But what other small businesses is doing is that they are purchasing, or they are having this insurance, what we call business insurance or key man's insurance, wherein that's 100% tax deductible. And in the event that there's something happen within the company, or the key person's decision maker of the company, so the insurance company is going to reimburse whatever is the expenses needed to keep the company going. So in that case, you can also claim that one as additional tax strategy or tax deductible expenses. So I guess that's it for today. And if ever you got some clarification with the medical tax credit deductible, just reach out to me and I'll be happy to answer all your queries, and let me know in whatever way I can help you out, guys. So this is dental expenses can be claimed. Yes, Charmaine. Dental expenses can be claimed, but there's certain amount that you can claim, and what are those allowable deductions that you can claim. But for further information, yeah, you can reach out to me, and I'll be happy to answer whatever is your question with regards to tax deductible. Which one is tax deductible? Which one is not? Oh, hi Jerry. Yes, I know. I remember you offer a healthcare plans to small businesses. Yeah, this is what I'm so maybe some of my financial advisors friends here, my social media friends, you guys can shout out and like send a comments here. What are those services or that you can offer to our small business? So that's what I said earlier, that as a small business owners, maximize your tax deductibility by getting yourself a business insurance, or what we call key man's insurance. And that way, if there's something happen with the business decision maker, the insurance company will reimburse the company to, in order for the company to keep going to their whatever is their usual business. So that's it for today, and hope to catch up with you again, guys, soon. Thank you so much. And this is Jamar, or Jem again, and I'm a chartered professional accountant helping small business owners paying less tax with higher incomes. So that's it. Bye, guys.